Today's market call is presented by FactSet, financial data and analytics powered by tomorrow. 1 p.m. on the East Coast. I had a long day yesterday.
Yeah, you did.
Market call,
Yep.
Guy and Dan. It's 10 a.m. on the West Coast, and if you're in between,
Yeah,
as I said,
you're somewhere in between.
yeah, it could be 11, 12.
You could be in Mountain Time.
Sure.
You could be Central
Standard Time.
Yeah.
Yesterday, I was in all kinds of time. I was on the road,
Yeah.
as they say.
Yep.
But it's market call.
Yep.
Rangers play tonight.
Yep.
The Yankees are 29-15. Just very matter of fact.
Mm-hmm.
Mets.
Business-like.
Any Met fans out there that can tune out now?
Right.
I'm just saying.
We know the
By the way, if it's
don't
Thursday,
don't turn out.
Carter Worth will be joining us.
Yes, he will be.
And as I always like to say, if it's Thursday, it's got to be
Butters. But not today, Guy. While you were sleeping, or you weren't sleeping, while you were gone
You did Butters yesterday?
We did Butters, and it was great.
I just like to say, can we just do it just for me?
Nope, we can't. A little programming note. Tonight on CNBC's Fast Money in the 5 o'clock hour, we're going to have the CEO of FactSet, Phil Snow.
Come on.
Yeah, he's going to be on the show. And, you and I, about 2 weeks ago now, we were at the FactSet Focus Conference in Miami. I think we did a live market call from there.
Yeah.
It was really interesting. My quick takeaway of like what I heard about how they're integrating generative AI. We spent a lot of time talking about generative AI and who the beneficiaries are. That company, FactSet, and I'm a user, and Guy's a user, we already know that they're using generative AI in their product offering right now. I'm using it for a whole host of things that they're rolling out across, let's say, their transcript AI, that sort of thing. When you're reading public company, earnings transcripts, it's helping you think about them, do prompts for that, summarize the stuff. So that's going to be an interesting conversation today at 5 o'clock.
And it's all about efficiencies, and that's one of the conversations that came up multiple times. So that's that.
Yeah, that is
Rangers, as I mentioned, play tonight. I'm scared.
Are you having a watch party, Guy?
Excuse me?
It could be. They could wrap up.
Whoa. No, Amanda, if you want to say something in my ear, you can about me. Move on. But what does that mean? Watch
you're
party?
going to get people together. You're going to watch them like close out the series and move on to the next.
First of all, I know you said that just to piss me off.
Yeah, I did.
No, I don't have watch party. I don't enjoy that because you know what happens at watch parties?
What?
People don't watch.
All right. By the way,
it's just
this is a market.
How the kids? Where'd she get into college? Oh wow, good for. Is she excited? Yeah. I mean, you know what? Stop.
This is a market watch.
It's embarrassing. That's what goes on. That's what goes on at these watch parties. Hey, I just bought a new car. Did you like that Tesla? I saw that Mercedes in your driveway. Yeah. Oh, look, the Rangers just scored. Yeah. But as I was saying, you know what? That's fucking bullshit. Yeah. Anyway, sorry. Now I'm on a tangent.
Wow.
No, but because it is. Let's go to the rundown.
I did this.
New highs. Now what? Chart check on old tech. Old tech like Cisco, DELL, those types of things.
Interesting action in those days.
Walmart rallies on earnings.
Yeah, I was wrong on that.
ETF trade ideas. XBI, KWEB, ARKK. So there's a lot. There's a lot here.
Yeah.
Anyway. That's the story. Listen, you know who I like? He's a banker.
Yeah.
People say he's the most important banker in the world.
Yeah.
Whether that's true or not.
Yeah, probably.
Jamie Dimon. And I got to tell you, he doesn't shut up these days.
Yeah.
I don't know. He must talk in his sleep because every morning I wake up, he's saying something to somebody else. But he said a lot of inflationary forces are still in front of us. I happen to agree. So look, the market obviously championed the numbers they got yesterday. That's fine. I will continue to stay. Inflation is still a problem. But the fact that he says it makes me feel a little bit better about myself. By the way, he looks very thin there.
He does. He looks fit for his age. I think he's getting close to 70 years old. And I'll tell you this.
So am I.
Jerry Seinfeld is 70 years old, and Jerry looks a lot younger than this guy. I think what's interesting about this is that obviously we talked about it last night or yesterday that JP Morgan had that 10% sell-off, right, from its recent highs in early April after its earnings announcement. It's powered back. It's making new highs every day here. And their CEO has a lot of kind of, I think, cautious stuff to say about the economy and what they're seeing through their consumer. And then when you look at their head strategist, or at least their derivative strategist, Marko Kolanovic, he's got a 4,200 target on the S&P 500. Yesterday, we talked about Brian Belsky putting his target up at 5,600 by year end. We're at 5,300 or so. So again, obviously Marco's offsides. I've been offsides. Lots of smart folks. I'm just kind of going to, Marco's a smart guy. I think I'm a relatively smart guy.
Agreed.
A lot of people are offsides on the markets here. So, Guy, how do you suggest the juxtaposition between investors' perception about what Jamie Dimon is doing and how they're positioning the company and new all-time highs versus what a lot of the mouthpieces are saying for that company.
It's interesting that both Belsky and Marco can be right. That's the fascinating thing about the market. And what I've learned over the years is, intelligence is not necessary. Intelligence and be able to prognosticate in the markets do not necessarily go hand in hand. Sometimes, as a matter of fact, the more you try to get in the weeds and dig and sort of be rigorous, sometimes the more that works against you. And David Tepper, who again is maddening at times because of the simplicity that he brings to the markets, and that to me is, maybe it is sometimes that simple. By the way, I don't think that it is, and I think at some point fundamentals matter. But to answer your question, his being Jamie Dimon's, his concern now over the last 2 years, I think is absolutely warranted. And he's in a seat that one would think gives him a really good perch as to what's going on.
Yeah, no, again, I think it's an interesting point, a jumping off point to talk about the markets here. Let's bring him in. Carter Braxton.
Oh, I love Carter Worth.
Charting. It is Thursday. It's Carter. Carter, how are you?
I was just thinking about something. Those two guys are the same age, but of course, Seinfeld looks better than Jamie Dimon. I mean, one guy has done comedy and put together a $1 billion net worth. The other guy, granted, it's double at $2 billion, but man, he had to go through a whole hell of a lot of mud.
Yeah, no, that's true. Listen,
Carter just bringing the goods.
That was smart. We have a crack staff here.
Crack team.
I mean, really do.
Crack team.
I mean, Amanda's in. Am I doxing her?
No.
Or am I dexing her? What is it?
Doxing.
She's in North. I can say this, right?
Yeah,
she's in North Carolina.
Yeah.
Jacob is typically there, but he's here this week, right?
Yep.
Timmy's here.
Yep.
He's in the office every day.
Yep.
We have this junior over there. He's a bantamweight fighter or something from Georgetown. He's our intern. I like. It's got great hair.
Got Hockman.
But you jumped me.
Oh yeah.
Because I was going to say Bill Hockman's here.
Yeah.
He's a comedian.
Yeah.
And it's interesting that Carter says this because what I have found, and I'm not putting myself in that category. I'm not that funny, but some of the brightest people you'll ever meet are comedians. Correct. So I understand Carter's point about the stress of one job and the lack of stress with the other. My pushback would be, though, comedians are very in tune with the human condition.
Yeah.
So they suffer because of that. I mean, just look throughout history because they understand. Look at a Robin Williams, for example. Yeah. I'm sorry, Amanda. I really am sorry. I got a lot on my mind.
You got a lot. Well, we can go a little.
No.
All right, here's the deal. Carter, S&P broke out to a new high on that CPI print. It was a nice clean breakout above the prior high. So you got a little bit of a gap there. I was not in the camp of playing for a breakout. I think regular viewers, listeners know that. What has to happen here to establish a new range above that prior high? Again, it wasn't there for that long. We did have that consolidation, if you go back and look in, kind of February, March or something like that. But then we had that sell off into April. How are you thinking about this move? Because we sold off about 6% in the S&P. Now we're up about 8% from those lows. How are you looking at this thing?
Yeah, not much hesitation at the former high, if any, right? And so, two ways to interpret that it's, sort of euphoric, impetuous, or that it has that much behind it. Typically, and you'll certainly see that in November, December, it gets to the former high and contends with it a bit. But it seems to be a uniform, except for strategists, interestingly, in which Wall Street has their price targets are meaningfully below as a group, right, as an aggregate than the current level, with a lot of time left in the year. But it seems to be there's a lot of complacency and or agreement, whether you want to measure that by VIX or just measure it by broad participation in ETFs, inflows, and et cetera, and so forth.
I guess this is my question, and I don't know if you're able to answer, although you would probably be one of the best to be able to answer this. How much of a magnet do these moving averages become, especially when you're talking about an indice like the S&P 500? Here's the 150-day moving average. Obviously, we're nowhere near it. The last time we saw it, I think, was the fall of last year-ish into December. My sense is it's mean reverting over the course of time. The question is, how much time has to pass before you see it again? Is there sort of a standard amount? Or is this some arbitrary thing like everything else?
I mean, people rely on things at the wrong times or the right times. I mean, moving average, there's nothing sacrosanct about it. It's not a gospel. It's not you think about it. It's like if you were looking at an athlete doing his lap times. sometimes there's what this 400-meter runner does. He's been doing this for 10, 15 years since high school. And what is this lap versus the last one? We're trying to always put current price in the context of where we've been, right? And what that implies about how much could be left in a down move before it abates, gets so bad it's good, or how much in a strong advance before it just is full. Rich or expensive, although that's a strange word because cheap and expensive really don't apply in markets. There are biotech companies that have no profits at all and are worth $6-8 billion. And there are companies that have lots of profits, like Toyota Motor, and they're worth less than Tesla when the profits are probably 10x, right? So the whole notion of cheap, expensive is asinine. Valuation is a terrible timing tool. But what we know is that obviously after what is a fairly shallow, minor dip, correction, sell-off, drawdown, drop, that event of April, May, it did not carry through all the way to the 150-day moving average. Certainly, that's the bet that is usually right to make, and the one that I made. Now we're at new highs, albeit barely. And the question is, it's always this: if one is trading this thing, because this has nothing to do with Caterpillar, American Express, or Goldman Sachs, or Morgan Stanley, or Apple, or Nvidia next week. This is an instrument in and of its own. Is one buying this or selling this, increasing exposure to it or reducing exposure? It's a fairly steep 3-4 week move to and slightly above a former high. In a perfect world, if you're long, I would sell calls at a minimum.
Yeah. Hey, Carter, you had a great call on yields and the 10-year in particular. You thought when we got up to that kind of 4.7 or so that we'd kind of see a pullback here. Earlier in the week on Market Call, you were showing us that uptrend channel that you thought was about to be violated. We had that kind of benign CPI print, and we got the move. There's your 150-day moving average. It's kind of found a little bit of support in the meantime here. Are you surprised there wasn't a bigger move to the downside? We've gone from 4.75 to 4.35 in a matter of a few weeks. Again, it's not like that number was so soft. You know what I mean? Like, signaling that we couldn't see a reemergence of inflation. Thoughts here just on the chart and where you think, it probably gets to a level where if you were, let's say, short of yields, you'd look to take that trade off.
Well, for fun, it's always good to not know what it is. If this were a stock that had just dipped like this down to be fair, a level of support, would we press a short? I don't know. Would we play for a bounce? It's not the greatest uptrend. It really is a pair of twos, but the structural concept, and I think this is important, when something just gets so embraced, believed in, and popular, it's usually, and we see this in positioning, a lot of people study that kind of thing in the futures market and commodities and what have you, and inflows, when it's excessive bad or excessive good or excessive believed in, embraced, loved, considered sacrosanct, gospel, no other way but that way. It's almost always right to take the path less traveled, right? And so the higher for longer, it's so melodious. It rings in the ear, right? And phrases do, and things come along. But when it became so popular, it turns out that was the exact time to walk away from it, right? And there are two ways to look at yields, I think, and simply this: yields are up 100 basis points since the beginning of the year, 375 to 475. That's a lot. There's the other way. Yields are the exact same they were in Q4 of 2021. That's not higher for longer. And so maybe it is just Goldilocks, and the interest rates at this level, 4%, 5%, are just perfect. Yeah. And the rank and file securities analysts being paid by a bulge bracket firm to make judgments and recommendations about software stocks or soda water stocks or sushi stocks or sneaker stocks should not worry about the cost of 10-year money because it's benign, and they can go out of there, do their work of discounting cash flow and come up with their price targets. It might just be that we're in a Goldilocks moment for rates, if you will.
Great call, without question, because I was one of the people that thought incorrectly that yields would continue. I thought once we got through 4.7, we were making a beeline back to those highs we saw in October. That obviously didn't happen. We should find support here. We'll see. But let's go to the charts that you brought. The first one is the XBI biotech ETF. You brought some interesting charts, and you're suggesting potentially we're seeing a bit of a breakout here.
Yeah, so I thought we'd just do three ETFs that have nothing to do with one another, but XBI. So a low in October when the market made a low, a high in March or thereabouts when the market made a high, a give back, and the market is now back to its former intermediate high. This is not, but this action is constructive, a fairly pronounced intermediate downtrend, and now a move. Let's annotate it a different way, and let's put them together. And so, I like that. I think you can move higher. How much higher? Unknown, but certainly 96, 97, and perhaps more from there, or even back to the former high. What's interesting about XBI? Yeah, go ahead.
Yeah, I was going to say go back 8 years, and this is even more interesting. Yeah.
I mean, those aren't just random, and that's the irony of it. I mean, do we think the price to book of all this collection of biotech stocks was at some perfect level on those exact lows? It was all the same P? No chance. It just happens to be an instrument that's being traded, and people are studying price action. Now, the green arrow is arbitrary, or it's a judgment. It's subjective, mine, but I think that's what's coming, and then I think we'll ultimately move above that downtrend and get back to the highs of March, just as the market has.
Carter, you mentioned this one. And again, I think it's important to note that, like that downtrend, again, it's 2 points to your point, right? So from the 2021 high here, and obviously there's some authority with all those sort of bottoms. I would just say this, that like, I think there's as good a chance that it fails very near that downtrend line, or, because I don't know, on a fundamental basis, what the driver is. I could see if this market gets going, let's say, 5,500, something like that, there'll be a continued chase for, this sort of beta, right? And so in that scenario, that makes some sense to me. I'm looking at like July expiration. So I have the ETF at 92.5 or so, the 95 calls are like $3, like, so you have a $98 breakout. That's
where the line is. Interesting, $98. And even, well, that's not a lot. That's some pretty good eating from here at 90.
Yeah, and the reason I bring up that strike is, again, that is the downtrend, and a style that, Guy, you like to use, and maybe I'll let you comment on this, is like, buying the breakout, right? And that's one way to do it, defining your risk to about 3.5% or so.
Yeah, which makes sense in terms, it's interesting about the XBI. I think it's about 135 stocks, basically equal weighted ish. I mean, not entirely, but you understand my point. But Novavax now is the biggest weighting, and you saw what happened in that stock 2 days ago. So that obviously has given this thing some oomph. But the reason to be bullish here, I think, and this goes more to fundamentals than technicals, Dan, is the fact that a lot of these in this environment, there's a lot of M&A that's going to take place in this space. And these companies, a lot of them probably have bullseyes on their back.
Yeah. And Carter, it's interesting that you mentioned, and this is one of the reasons why I love your work. I love reading, your daily reports on worth charting, is that you preface this segment by saying none of these three ETFs have anything to do with each other, but you're seeing different things in different sectors. And when I think about how I look at the markets and the like, I love to see different sectors and how they're acting relative to each other, that sort of thing. So walk us through. You're looking at the Invesco.
Sure. Just one more thing on biotech before we go into if you made a point that's very salient, right? That if indeed the market continues, right, is this the kind of thing that would, what we're seeing now, and this is very straightforward, is catch-up trades. What's just massively outperforming that was lagging? Utilities. What's massively outperforming that was really lagging? China. And this is another instance of that, right? It's, in fact, it's large cap tech like Meta that's not really progressing. It's Microsoft, frankly, it's kind of churning a little bit. It's these ricochets because money is really getting maybe frothy or excited, or maybe it's going after meme stocks as we see. But if and as, yes, there's a continued move higher, the beta that's associated with this kind of thing is what give you the lift. But anyway, what was we have other.
Okay, so let's look at the KBW, the bank index, because this is an interesting, constructed ETF, Guy. We talk a lot about the, the XLF, but, Goldman is about 8.5%, Morgan's about 8.5%, Bank of America, 8%, Wells Fargo, 8%, JP Morgan, 8%. And the thing that, we've been talking about the KBW bank index, or the KRE, which has been a massive laggard. Look at how far this thing is below, its 2022 highs, right? And we've been talking about JP Morgan. We just talked about it making new all-time highs, right? So there are some massive outperformers in the space, and there's some massive laggards here. So I'm assuming that's one of the reasons why this has kind of caught your eye. And especially when you think about it's right back at that breakdown level from February of last year when we had the regional banking crisis.
Yeah, all of the above. And so one, we know it's a big move, right? And, is 51, 52% arbitrary? Okay. Is there a difference between 48 and 54? No, but a big move, and has taken place not over a day or a week, over now 5-6 months, and has come a long way. But let's look at a couple other iterations. So it's a fairly precise lines. In fact, they're very precise, and we've moved out of that massive downtrend where the bank index, this is tied to the KBW bank index itself, right? It's dropped from 75 to 35, and we've moved out of that. Now, another way to draw the lines is this. Look at these parallel lines coming up on the next chart, and you'll see that and we could flash those two back and forth. Maybe let's do that. So the issue here is if we're into a level of overhead supply. Now, one could say maybe it's going up to the 60 level. Okay. But you're getting to the point where it's not easy lifting anymore. You've retraced most of the damage associated with the regional bank crisis or whatever that was, filled the gap there, an associated thing. And then one other to keep in mind is look at this next. This is, and no one needs Carter Worth to do Fibonacci for you, but we're getting to a level where you've retraced 1/2 of the preceding decline. And so I've put a red arrow in there. Let's say first and foremost, if one is long, would you just say, let's double our position? I'd say check that one off, bad idea. Would one say if one is long, should we sell some calls? There's a thought. If one is long, should we sell some calls, maybe trim a little bit? There's another thought. Or do some other technique or approach or some other action other than just staying long with no hedging, or the first one, hey, let's double it. Those two don't come to mind.
Well, the heavy lift here has been done by, you mentioned Goldman Sachs. I think it's 8.5% of the index now. Obviously, JP Morgan as well. So in order to continue, look, are you going to continue get that kind of performance out of Goldman and JP Morgan? I'm hard pressed. So if you want to be bullish of this ETF, you have to, by definition, think that Bank of America, Wells, and to a certain extent, Citi are going to sort of start to carry the water a little bit, and they haven't been able to do it for quite some time, Dan.
All right, so now to probably one of the biggest piece of shits in the entire stock market.
Whoa.
And that would be the ARK ETF.
I thought she was a genius.
The ARK Innovation ETF. I mean, like, again, this was so frustrating in 2020 and 2021 when she was anointed what she was.
Well, I'm not here to, it's almost impossible. There was a point in time where the top 10 holdings of that ETF, I think 8 of them were down anywhere from 65 to 80%.
Yeah.
Remember that?
Yes.
I mean, that's almost impossible.
I think we called it the island of misfit.
It's almost impossible to do.
Toys.
Anyway.
I mean, like, if she had bought them all down then, you know what I mean? It'd be amazing. But, the top holdings are Tesla, Roku,
it was amazing.
Coinbase, Block,
DocuSign was
CRISPR,
in there. I mean,
Roblox, Robinhood, Zoom, Palantir, Unity. I mean, again, all right. Well, that was our little rant. Carter, tell us what you're seeing in the charts here and how this thing came to mind for you.
Yeah, I think it's important to put this in context. There was something called the Munder Net Fund in Detroit. Just to visit them. At one point, they're taking $100 million a week. Their assets peaked at $54 billion. It's gone. There's another in Denver, Marsico. Yeah, they were up to $50 billion. They're running about $1 billion now. Tom Marsico, one of the greats of all time, but it's not about that. They're always at a moment in time, someone takes on deity status, is considered foolproof, considered smarter than all. And so this time around, it's Cathie Woods. And one could say, well, what about Jim Simons but that's different. Now you're talking about 200 PhDs in math who are just cracking the code, which is different altogether. This is subjective work, whatever they're doing at Marsico or Munder Net or Cathie Woods' case, applying judgment. And we know how hard a game this is. And so this is just the poster child of the day. And as you see in all those articles, she's now lost more money than she's made since she started. But independent of all that, and tying it to other greats that have also stumbled, someone at every market cycle in the peak of 2021, someone is embraced by all, and it always ends the same way. But this chart, the great wipeout, the big base, and it's tempting to think, okay, it's bottoming, but I don't think it is bottoming. And the reason that is, in front of the arrow, is all about relative performance. So let's look at a ratio chart. This is the relative performance of the S&P. We're about to crack to new lows. And we might have one other iteration of this. Look at this. It's about to breach its 2016. So no thanks. sold to you, as the expression goes. I want to be short this, or certainly if one's not a short seller, don't buy it.
As Doug Cass just texted, I'm sure she's brilliant. I've met her. She's been on the show, but I think she's probably is brilliant, but more so she's a marketing genius. And I think that's really what it comes down to, because, if you just were to look at this and say, my God, with no context as to who it is, you'd be like, this person has to be asleep at the switch. But I think she's done a wonderful job in sort of cementing her status, to Carter's point, the whole deity thing, which I don't adhere to in terms of putting people on those types of pedestals, but there you go.
Well, I guess, listen, what I would just say is this, is that, she believes things about the future of some of these companies and the people that manage them that most other people don't, which actually gives her, I'm sure they do really good, deep, fundamental work. You know what I mean? I'm sure she is a lovely person. And I'm sure she's had a, nice, smart career. But what I'm focused on when I called it a piece of shit, it's the construction of it. It's the doubling down of it. It's the way that the capital comes in or comes out, and they have to be at low selling things. You know what I mean?
Yeah.
Like raising cash. So that's my only point. I think there's probably much better constructed ETFs where people who believe things that don't have the same dogma about a handful of names, right? And about where they're going to some price target that none of us can even imagine. So that is what it is. All right, Carter Braxton Worth, we really appreciate you being here with us next week on Tuesday. Guy, little mea culpa.
I like the little red shirt underneath.
A lot of stuff going on there. Little mea culpa for me earlier on in the week. We took a look at Walmart. I know that you actually prefaced the whole conversation by saying that you have been positively predisposed to this name for a whole host of reasons. If there are some companies that have been able to take advantage of this inflationary environment, it's been Walmart. You weren't ready to kind of get off the train. I looked at it and I was trying to thread the needle between what I was hearing about a U.S. consumer, whether it be a discretionary name like Disney or Starbucks, or whether it was Lulu, but then it got down to McDonald's and some of these others. And, again, I'm looking to set up trades when I'm using options and kind of define my risk and look for good risk rewards. Now, in hindsight, with the stock up 6.5%, I could have found a $5 wide call spread near the money that costs about $1.25, and I'd be up, more than double my money right now. But again, maybe it's my dogma. Maybe I was looking for reasons to be bearish, but I had enough reasons in the consumer space, guy, to kind of make that bet. And here I am. I paid $1.25 for the 60-55 put spread in June. It's nearly worthless. I do have a month. Let's see if it fills in the gap right now. There's no reason to sell a near worthless put spread, guy. But again, wrong. I'm here to say I was wrong. I don't like being wrong. I don't like losing money. I don't like getting thesis wrong. But let's see how some of these other retailers.
Yeah, I mean, look, it's again. I started by saying the market has a way of humbling us all, and I think all the arguments you made perfect sense to me, and it had me questioning as well. But a couple things. Walmart, seemingly, they're really benefiting from a huge trade down, in terms of what's going on with the middle and to a certain extent upper class. I mean, there is a big push down into Walmart, and they're winning to that, and you're seeing it in their numbers. And we've talked about that for a while. I think now it's 65% of their customer base has an income of $100,000 or more, which, maybe $100,000 is not what it used to be, but it's still a significant number.
I think it's at least 2x the median of America.
100%.
So that's the point.
And that's why, so what is the dynamics around that? Like, what's going on? With all that said, you may have been early, and in our world, early sometimes, but I will tell you, today the stock Walmart has already traded 2 times normal volume. It's 1:30 in the afternoon. So it'll probably trade 3.5 times normal volume on a bit of an island here, as you can see over my right shoulder. So, today might be, I don't want to say it's going to be the all-time high. We're never going to see it again, but this could very well be a short-term top in this name. So just be aware, folks.
Yeah, it'll be interesting to see if tomorrow, if it's able to follow through, or where it closes on today's day, and if it starts to fill in some of that gap. But again, early is clearly wrong here. And the way I constructed the trade, being long premium to the downside, $1.25 put spread is now worth about 15 cents. But again, I don't sell it, because if it does fill in that gap, I might be able to kind of wiggle out of this thing for 50 cents or something.
And you got time, as you said.
I have a little time. And by the way, this is also one of the reasons why tomorrow is May expiration, right? We could have done the weeklies, the monthlies, whatever the heck it is. That is a pure binary sort of trade here. So again, I don't like to trade them like that. Guy, just before we get out of here, I thought we'd hit some of these old tech names. Cisco reported last night. It seemed that as the call was going on, it initially gapped up 4 or 5% on a beat, a raise, some commentary that sounded okay. It gave it all back. Maybe we could look at a day chart here today.
It's lower today.
So up 4.5%, opened higher on the day today, and now we have the thing down 2.5% or so. You see that downtrend that's been in place from the highs back in September. You know, you got to think this thing's headed back towards, I don't know, 46, $45 or something like that.
It's interesting. And if Amanda, I know, is capable of doing this. So if you could do a longer term chart, Amanda, go back to 2020, and I'm going to start playing the pennant game with you. And you can draw the uptrend from that low in late 2020. You can draw that uptrend because it's pretty well defined. Yes, that's it. Back out that nonsense there. And then you could draw the downtrend probably from the highs of 2022, and you're going to get 2 points. So that pennant, you're going to continue to get this pennant formation. And I think what's going to wind up happening is, you know, we're going to vacillate in here. We might be able to trade a little bit higher along the way, but at some point we break. So my inclination is, you know, maybe we have a little bit more room to the upside, make that third point of the trend line. But, you know, this pennant formation suggests that the stronger of the two lines is the uptrend. So theoretically, we should test that upper echelon. But I think we're going to sort of continue to grind until we break one way or the other. And my sense is we probably trade the upper bound, but then break lower.
Yeah, I'd be really surprised though if we even
test that guy.
Yeah, it would take a broad market rally.
Look, it's down big today. To your point.
Well, and then I also wanted to highlight Intel. Okay, so this is another name we used to talk a lot about 25 years ago. This is what this little segment is, guy. Just so you know, and,
old tech.
You know, so we had disastrous performance leading into their print. I was very surprised that after the stock sold off 20%, that you could get another gap like that. It's trying to find a little bit of a home. Maybe it fills in that gap. I'm not particularly optimistic, but I wanted to get your take on AMD really quickly, guy. Maybe they can pull that one up. Look at the 2-day move that we've had there. It was added to some list at Wolf. NVIDIA was taken off. It's probably a short-term sort of trading sort of thing. And I thought the AMD move is kind of interesting in a way because, again, we talk about playing catch up. There's the 2-day move. Pull up a 1-year chart.
Longer really chart, it'll serve you well. I mean, because we round tripped. If you look, I mean, we round tripped the move from January when you and I were in Miami with Mel. I mean, that's effectively what we did. I mean, they reported earnings on January 30th. Stock actually went lower for 2 days. And then obviously all the NVIDIA noise around AI and the technology and semis took the stock to 227 and change. And then we round tripped the entire move. So maybe we found some short-term support. And I can't speak to what that list was. I didn't see it. But, it made sense that we're bouncing a little bit here because we haven't had a bounce in basically 3.5 months. Yeah,
it'll be interesting to see Intel and AMD and some of the other names that are trying to play a little bit of catch up in the GPU game or the data center game to NVIDIA reports next Wednesday. It'll be interesting to see how closely they trade with it, whether it gaps up and makes a new high, whether, rising tide lifts all boats, or if it were to sell off. I mean, look at that thing. I mean, I got to tell you, guy, if I were short that stock, it scares the shit out of me right here. I mean, like, look at it, because for all intents and purposes,
I know
it's been basing here. We saw what it did when it broke out of that base, in the back half of last year. Again, we'll take a closer look at that next week. But one of the things that's important, let's go to Dell here, guy. This is obviously a customer of NVIDIA, right? And so the news that got it going, breaking out yesterday, was that Tesla has been a big buyer of their computers or servers that go in data centers. They're going big into obviously AI, and there's XAI and the like. This one is less interesting to me. I just feel like at some point this is going to decelerate, and the valuation probably doesn't make a lot of sense. Thoughts on Dell?
We had an analyst on, and I don't remember his name. I apologize. I'm sure Amanda can get my ear. But in November, when the stock was basically less than half of where it is now, he put an upgraded the stock, and he said, this is one of those picks and shovels AI plays, and that proved to be correct. That's exactly what's happened. But again, has it overextended like a lot of these things? Yeah, probably. And when you see, is it a sell the news event on what's going on today down 1.5%? I mean, maybe, I guess. So I wouldn't, I shouldn't say that, but I wouldn't run too far from Dell. With that said, I mean, this can go all the way back down to 105 or so and still be in play.
Yeah, and the only other point I just mentioned valuation. I mean, it's trading basically below a market multiple. The only issue is there's, like, even with all this excitement about new orders and the like, there's not like great growth. I'm looking at consensus for fiscal 2025 is what we're in. It's like high single digits. Next year, it probably gets to low teens. And then on revenue growth, expected to be about, 5-6% this year, 5-6% next year, trading about 17 times. So again, this is not like a beneficiary, like it's a company that has 23.5% gross margins, right? So you reward high growth companies that are able to raise prices and get good margin. That was one of the reasons why NVIDIA gapped up. While I didn't think the quarter was like a blowout the way it had been the last few quarters when they reported 3 months ago, at least they were able to raise their margin guidance, right? And so that was the thing. So at some point, they're not going to be able to do that.
That's going to be the turn.
Right. So again, I just thought that was interesting. Guy, another one, Oracle. This was the O in your hope trade.
Yeah, that was a
last
few
year.
years ago.
Yeah, you nailed that.
Well,
No, it made all-time highs that year, by the way.
And look at the move in Oracle. I know we're going to show it. I mean, you've had some huge downdrafts in this stock.
Some big gaps.
So basically around quarters.
But look at this. So this is kind of funny. There's an up one, a down one, a down one, an up one. You can see that right there. When I see a chart like this, that's just like a broken set of snakes here, you know what I mean, or chains or whatever. This is a company that does all sorts of fugazi things with their numbers. That's all I can tell you.
I mean, they've grown by acquisition. They can move needles here and there. I mean, I'm not saying to do anything wrong.
But look at this. It's kind of funny in a way. Like the stock gapped up in March, huge gap to new highs, right? Fills in the whole gap.
Yeah.
And then it's only started to recover when supposedly they're getting big orders from Elon Musk for data. So again, you know what? I think all these guys are in cahoots with some goofy stuff here. That's just my 2 cents. I think it's
what is cahoots?
I don't know. They're like in agreement.
Oh, in accord
or something like that.
Yeah.
Is that what you
like the Russians and the Chinese are in cahoots?
Yes, they are. Here's the last
which nobody was seemingly talking about.
No, actually we have 2 more. Adobe. Okay, this is one valuation looks much less compelling to all those other names we
always
just talked
been
about.
Expensive.
So look at that gap, guy, from March, and the fact that the stock has like barely seen an uptick in a month and change is just really interesting to me.
Yeah, I'll tell you something about it, and this this because we sat next to each other for a long time.
Yeah, we have.
For years, I would talk about Adobe into earnings, and what I would say is, I'm just telling you what's going to, and I'm not some genius, but I said, own it in earnings, sell it ahead of earnings. It will sell off, and then wait a week and buy it, and then a month later be making new highs. That worked a lot until the end of 2021, and then the interest rates. So when valuation became a concern, obviously Adobe was not spared. The fact that we basically got almost back to those prior highs and have failed, that's concerning.
But by the way, those were 52-week highs. Put a 5-year chart if they can up in this never made a new high.
That's what I'm saying. The high, I think, was in November of 2021.
Yeah. So that's really interesting to me. Just to be really clear. So when they reported in mid-March, the stock was down 13.5% the next day. The quarter before that, in December, the stock was down 6.5%. The quarter before that, it was down 4.25%. So I think it's interesting. It's been on a string of disappointments, especially after when it was at those 52-week highs last summer. People were really excited about how they were going to deploy generative AI across their suites of services and the like. But guy, this is trading 27 times this year. It's expected earnings growth of about 12%, unexpected sales growth of about 11%.
It's expensive.
About the same next year, but again, this goes back to margins. It's an 89% gross margin.
Yeah, well,
so that's
sort of the only game in town.
I'm kind of like, listen, if it can hang in here and we're going to get to mid-June when they report, this is a bit intriguing to me on the long side.
Okay.
That's all I'm saying.
With that valuation, so those margins justify the valuation. If you see, this better than anybody. When you start to see margins wane, the first thing people look at is what's the valuation, and then shoot first, ask questions later. So, and I'm not saying that, but you got to be aware that when you have those types of numbers, something doesn't add up. By the way, NVIDIA is sort of in a similar camp in terms of margins and outkicking their coverage in terms of revenue versus earnings. Anyway.
Yeah. All right. Last one. This is our little, we're taking a quarter
international business machine.
A quarter of a century back in time, guy. We're going to learn a little bit.
Everybody made fun of me last year.
No, you said Gary Cohn, chairman, they're going to do some stuff here. Here's the company expected to grow earnings 4%, sales 2%, trades at 17 times this year, 16 times next. They're trying to get all over this Gen AI thing. The thing that makes me nervous about this company is that every supposed big secular computing shift, they start running ads on the NFL and this and that or whatever. Remember, you had to watch this tomato trade across the blockchain and this and that or whatever. And
this chart scares the shit out of me.
Yeah.
So, and I'll tell you what, this looks like a Facebook chart, by the way. in terms of that. You have that huge gap higher. Go back and look. I'm looking at it now. Go back earlier this year. You have the gap higher, create this island. Then you have the gap lower. Now we're right at the 150-day moving average, seemingly we're the inability to get through it back on the upside. Very scary looking chart right here.
Yeah, no doubt. Again,
that's just me looking at a chart.
I just think it's interesting that some of these. So we looked at Cisco, we looked at Intel, we looked at IBM, we looked at Adobe, all underperforming. Oracle well off its highs. Now IBM well off its highs. The Dell is the one that seems kind of interesting. So your point was don't go too far away.
105.
From them.
I think you can get Dell. I think you might gap fill. In Dell.
All right. One last thing before we get out of here.
Butters?
Guy. No, AMAT.
Oh,
AMAT reports.
Oh, you did Butters yesterday.
After the close tonight. So again, this chart looks a little bit like the Walmart chart to me. A little bit. And again, no comparison to these two companies. They make machines that make semiconductors, and obviously they've been benefiting from the CHIPS Act and reshoring. And every time you hear some chip company getting $5 billion or $7 billion or whatever to build a fab here in the U.S., AMAT's going to benefit from that. Okay, so this is one where this is in my Zebra trade, by the way, Guy.
What is that?
That's Zebra. That's
what
my trade
letters?
For the fast money. It's the A in the Zebra.
Oh, AMAT.
Yeah. Okay.
Zebra.
What's interesting about this one is
nice
that
job by you.
Earnings growth this year is basically flat. Sales growth this year basically flat. They're not supposed to start to benefit until next year, mid to high teens earnings growth, 12% or so expected sales growth. Okay. This is a company that again has 47% gross margins. Okay. So it's not something like from a pricing standpoint, they're going to be, but trades 26 times this year, 22 times. It's not that cheap after the stock has had this move. Stocks like this make me a little nervous into the print. You know what I mean? Because again, I love the story. It's working out really well. I think it's a kind of slow and steady thing. I'm not a buyer right here though.
You know what this chart looks like? Hauntingly so. If we do a longer, so forget this chart, do a static AMAT chart. Go back like 5 years.
See that one? Oof.
Do a real-time AMAT.
Yeah.
5-year aim. Okay. That's it. Okay. You see those? Okay. Now look at an SMH chart if you want to. So you see those little bit of a double top in 2022 and again in December of last year.
Yeah.
Then had that little bit of a sell-off. And then once we got through it, it's off to the races. That's exactly what the SMH did. A little more so with the SMH. I'm not suggesting they're all that related. They are. So what do I thought about the SMH? I still think you're going to see a 165 move in the SMH at some point to get back to those prior highs. So by definition, maybe it's a bit of a false breakout here in AMAT. We'll see.
Yeah, again, 165. That
in SMH, nobody thinks that's happening.
Yeah, I mean the next stop is 200. That was the low just from last month. So if you think about it, it went from 240 to 200. That was a considerable move at the time. But again, this is all going to sit on the shoulders of Nvidia next week. It's also interesting that AMD now is only up 3%. It was up over 5% or something like that. Let's see how some of these other semis close. And here's another. This is just from a purely sentiment standpoint. Remember that SMCI guy? That one was going
Super
crazy.
Micro.
Super Micro got out of the Russell 2000. That thing traded north of 1,200 in March, traded as low as about $700 last month, had a big move yesterday. That one's interesting just from a sentiment standpoint.
I'll watch it.
Okay. Keep an eye.
I am going to keep an eye. Well, I obviously have things on my mind.
A lot. You seem fired up coming in here today.
Oh, I am. But you started with the whole, and Bill Hockman looked at me. It's like, you're out of your friggin' mind when we were talking about the watch party.
That was a little.
No, it's
the things that fire you up.
No, because I've you know what? I've been to those things, and I've vowed.
We could tell.
I vowed that I would never do it again.
Don't ever invite Guy to a Super Bowl party.
I know. Seriously?
I know.
Seriously. For what reason? And I'm also, by the way,
chicken wings and guacamole.
And I don't need either. I'm and you can at me if you want. You should. There should. You know what halftime at Super Bowl should be?
What?
Time to get up, take a leak, go back to your seat, and shut the fuck up.
All right. So
there should be no halftime
can I ask
show.
You a question?
No, you look. No. You think I'm wrong?
I don't.
If you're going to the Super Bowl
or
watching the Super Bowl,
2002,
the Who?
U2.
Huh?
Remember when Bono? He opened his leather jacket. And it was an American flag in there. I'll tell you this. So Eddie Vedder.
Did he smuggle it in?
No, it was sewn into his jacket.
Oh,
It was pretty cool.
Okay. I missed that.
Eddie Vedder,
know why I missed it? Because at halftime, I get up and take a leak.
I know.
Like most people do.
Well, most people do.
No, it's
Eddie Vedder the lead singer of Pearl Jam,
Yeah, I know who he
was
is.
asked by Bill Simmons on the BS podcast a couple weeks ago, would you guys ever do a Super Bowl halftime?
I hope he said no.
He said no freaking way.
Yeah.
And he goes, by the way, I think it's really unfair to the players that this is the biggest
Wait a
game
second.
of their lives.
He said that?
Yes. And they have to wait 35 minutes.
So he agrees with me.
Yes.
Eddie Vedder agrees with me.
Yes. New respect.
I think he's got one of the great voices in rock history.
He's
I
the
love his
man.
voice.
By the way, I saw
The fact that he said,
Friday
and he's
night
a
in
sports fan. He's a
Friday
huge
night-
Blackhawk fan.
He's a huge Blackhawks,
And Bulls, I
Cubs,
know, I know.
Bulls. He's the man. He has this crazy collection. He went through it with Bill Simmons. There's a video of it. Go to theringer.com or whatever. He's got a collection of the old baseball helmets. You know, the ones that are like that you get the ice
Love
cream in the park. You get those every once in a while. He's got an old collection of those. And he also said, you ready for this? Johnny Ramone from the Ramones turned him on to that sort of collecting.
Fantastic.
And you ready for this? Once Johnny got every team in the league their old school hat, then he started going after every Hall of Famer's hat. That's pretty cool stuff.
Badass.
I didn't think Johnny Ramone had that. You know what I mean?
I think that's great.
Next week I'm going to be in LA. I'm going to go see
you're
Pearl Jam 2 nights in a
Of
row.
course, sure. Listen, I got to say something else.
Yeah.
Magically, somebody. What is they?
Magically
What's
delicious.
that kid like that Harry Potter person? What did he have? Like
A wand.
A wand.
Yeah.
So you wave the magic wand, and I'm now commissioner of the NFL.
Yeah.
Day one.
Yeah.
I get up in my press conference.
Yeah.
Okay, folks, this is the deal. Halftime show of the NFL. I hope you enjoyed it. No fucking more. It ain't happening anymore. Number one. All these bullshit games in like Sao Paulo and
Gone.
Dresden.
Mexico
It ain't
City,
happening. Okay.
gone.
And you know what? It's just not happening.
It's the national football.
It's the
league,
national
not the
football.
international
Not that I'm
football.
adverse.
But it's all
It's
about
just-
money. No, that's all.
Well,
it
you know
is.
what? No, not anymore, pal.
I know.
And all these like third and fourth uniforms. No.
Question for
You have two uniforms. You have home uniforms. You have away
not
uniforms.
throwbacks.
That's it.
What about this? Did
Yes.
you see the schedule yesterday?
And you'd be like, "Oh, get off my
Look at
lawn,
this.
boomer."
They are trolling you right now. That is Amanda getting all up in your grill. Your New York Football Giants. That's what they're going to be wearing next year.
Fucking
But
awful.
can I ask you another question, guy? What would you do?
Put that back up.
But
That's just awful.
What would you do about the double Monday night games? They have an
It's
early East
insane.
Coast and then they have a late West Coast. They're
it's-
doing that like 4 times.
It's insane.
Too much
It's-
football
no,
on a
it's-
Monday
it's-
night. So you got
Look,
Thursday night.
look,
You
I
got
have no problem with Monday Night Football. I mean, Cosell, Don Meredith, Frank Gifford,
I
unbelievable
love
booth.
Gifford.
I love when Meredith used to sing, turn out the lights.
What
when
about Al
somebody's getting-
Michaels? Al Michaels.
No,
one of my
Al
all-
Michaels is a
he's-
Johnson.
He's one of my all-time faves.
No, I
love
don't
Al.
like him at all. I like Don Meredith because he's funny as shit. He's smart, played the game. He didn't take it so effing seriously. He enjoyed himself. Al Michaels, I mean, he thinks he's a brain surgeon.
You know what? You know what?
I'm
he-
not
can I
that
tell you
interested.
something?
Hold on a second.
He's
Monday
got
Night
a
Football-
photographic memory. Al Michaels.
What does that mean? He looks
He
good when
literally-
he looks
could
good.
tell
Remember
you
things.
about a game that he
Oh,
called in
Amanda's texting
baseball
us. Hold
in
on. What is
St.
she
Louis
saying?
in 1973.
I have to pee. Amanda has to pee.
Well, it's halftime of the Super Bowl. Get it?
See that? Yeah. Anyway, I've got no problem with Monday Night Football. Thursday Night Football is bullshit. They shouldn't play on Saturdays. I understand college is typically done when they do that. No. Forget about it. It's Sunday. Maybe you want to play a 4
What about
o'clock game.
Christmas Day?
And then
Netflix
that
is gonna
whole
have
thing.
2
I've
games.
been waiting all day for Sunday night. Fuck no, I haven't. I have not been waiting all day for. I hate fucking Sunday nights. That song is insulting.
You know they've been doing.
Who is that person?
That old guy?
Justine Timberlake?
Oh,
What's,
I don't know.
what is? Oh, Carrie Underwood.
Yeah, but they've had a whole different slew of people do it. over
I
the
don't.
years.
Doesn't matter.
Yeah, this
I
country
have
guy.
not
Who is
been.
the country
I have
guy?
not been waiting all day for
No.
Sunday. Sunday nights suck.
Yeah, because you got to go to work the next day.
All right, that's it.
We're gonna cut that little bit.
No, we're not
People-
cutting anything. You already happened. You can't cut what already happened. And if you have a problem with me, you know how to find me on Twitter. You know what? I don't
Contact
hide.
at riskreversal.com. Hey, by the way, you and I are about to sit down with Danny Moses and Steve Eisman.
Big Short guy.
The both of the Big Short guys.
His wife in The Big Short was Marissa Tomei.
You got a lot of time for her.
a lot of time.
Yeah. That's going to drop in your favorite podcast store
Mhm.
tomorrow morning.
Mm-hmm. Friday morning.
You know, Guy, I'm going to be on the 11th hour tonight. That's MSNBC.
Stephanie Rule.
Stephanie Rule. Love Steph. That's 11 o'clock. I have our show. You and I.
That's
are
a
gonna
lot
do
of. That's a
Fast
lot
Money
of media.
At 5 o'clock. I have dinner in between that. What do
You know what?
think?
I text
How
Rule
many
every once in a while?
combos should I have? Like, what should I
No,
cut off?
no, that didn't work out well for Jeff Mackey. Every once in a while, like Rule will put out a tweet
Yeah.
like right before her show.
Yeah.
So I'll text her and I say, "Don't suck."
Do you think you get up in her grill?
I do,
think-
and Molly does it every once in a while,
You
and
do
I
it
do
to
the
Molly.
same thing. I'm
She
like,
was on
just
last
don't
night.
suck.
I did. All right, by the way, I did Molly John fast
Which
politics.
freaks people out.
That'll drop tomorrow morning too. So
You know, a
check
lot
out-
of times this. Okay, I promise this is it, Amanda, and she can take a
No,
lead.
she's- yeah.
A lot of times, like a new person will come on to set of Fast Money,
Yes.
and they get them all wired up,
Yeah,
and they're
a bit
freaked out in the
nervous.
first place. And then Nancy starts counting down. 30. It means 30 seconds before we come back.
Floor director.
And then
Nancy.
I'm in my head, I'm counting down myself, and I'm like, "Good luck, whoever the person is." I'm like, "Just don't suck."
Yeah.
And it totally freaks them out.
And they're like this.
Yeah, but it cuts the tension.
This was fun, guy.
I have fun every
so
day.
listen, to our viewers who don't like profanity, we're
Oh,
sorry.
you know what?
No, I'm just
stop.
listen, I'm
come
gonna. You
on.
don't have to apologize. I'm apologizing. Okay, just to be clear, and this probably doesn't help the whole perception of Wall Street people, but this is kind of how people talk on trading desks.
But people every day, everybody talks that way. The
Specifically-
guy that was president of the United States talks that way.
Specifically on trading desks. That's all I'm saying.
They say people with higher intelligence are comedians
Yeah.
and people that curse a lot.
Except our comedian.
No, Hockman's very smart.
Wow.
He's always reading shit back there.
Yeah, we'll see.
No, I love people that read. It
Yeah.
expands the mind.
True that. All right.
And meanwhile, they want to banning books all over the place. Stan's looking at the
No,
clock.
we should thank FactSet for all those
Yeah.
tricked out charts and all the data. That
Thank
we
Butters.
We got to thank Butters from yesterday. We got to thank Carter Braxton Worth for joining us here on a Thursday.
I'm off the rails.
He'll be back with us on Tuesday, and that's it. I think we're good. I think the people are done.
By the
with us
way,
for the
I
week.
put out my top 5 bands of all
What do you
time
got?
on Twitter,
What do you got?
and then I put out 6 through 15.
What do you got?
If you want it, huh?
What do you got?
You know,
What are
we
the top
go to-
5? All right, I know what they are. You ready? For
Hold
this?
on a second.
They're-
I got to
they're
look. And
Led
see.
Zeppelin, The Who, Bruce Springsteen,
Okay,
Boston.
now number 1, Zeppelin, obviously. The
Yeah.
Who 2, you're right.
Yeah.
The Brothers Allman 3,
Oh, yeah.
Rolling Stones 4, Queen 5, and then I put out 6 through 15. Dire Straits 6, Bruce 7, Eagles 8, REM 9, Beatles 10, Skinner 11, Stevie Ray Vaughan 12, Clapton in any form 13, ELO Sleeper 14, Elton John 15. I will be putting out 16 through 25. Now, if any of you Johnsons are out there waiting for Pink Floyd or Metallica or Guns N' Roses, you're going to be waiting a long fucking time because they're not going to be on the list. As a matter of fact, on my 870 song playlist on the Spotify, I can say that now because we don't do the Sirius anymore.
Yeah.
Before what do they use? Pandora. I have 1 Pink Floyd song, "Shine On You Crazy Diamond."
Really?
That's it.
What about Eclipse? Is a great
Huh?
song. Eclipse.
Now
I love Pink
Pink
Floyd. You know, David Gilmour he's got a new album coming out. He's gonna be touring again. I'm definitely gonna go see that.
I can't wait.
I love David Gilmour.
By the way, Neil Young is coming up very soon.
Yeah.
I-
Well, no, he came up. He was your son.
No,
went-
on my list. On my
he
list.
played in Queens the last 2 nights.
By the way, if you haven't heard
Crazy Horse.
Powderfinger
I know.
live, it's unbelievable.
So, you know what? Timmy comes in and he's listening to Powderfinger the next day after going to the concert. You did right. by
What did
the way.
I say? I said if you've never heard Powderfinger, it's an amazing
You did
song.
say that.
It's an amazing song. Beautiful music. Weld is a live album. You should go to Tower Records and grab that.
Yeah.
What are you looking at me?
You know,
and Russ never sleeps.
You know what's funny?
Unbelievable.
They used to sell records also at
Who's they?
Blockbuster.
Did they?
Yeah. They moved
Uh-huh.
big into music in the
Tower
90s.
Records. I'd go to Tower Records
They
once
don't
a week.
exist anymore.
What happened?
They went out of business.
No
Supposedly,
kidding.
you know, vinyl outsold CDs for the first time ever, like since they've been
Wow.
introduced. Or, you know, I'm sure there was a period where, you know, vinyl was still doing better.
Okay. Sorry. I apologize.
All
If
right,
anybody's still here, I'm sorry.
All right, people. That was a lot of fun. Thanks to FactSet. Thanks to all you guys being here. Thanks to our team. Thanks to Hockman for just taking it on the chin for us here. That's it. We'll see you guys Monday again. Market Call. See ya. Thanks. Bye.